I'm not one for making predictions like this, but I think it's just too much is happening that is leading this way for it not to be understood that the narrative is being rewritten right in front of us on gold. And now with Russia coming out and saying silver too, and China buying up all the concentrate and the doré all around the world, gold and silver have never been more important. And I hope people are taking these weekly calls we have with a dose of seriousness, because this is it. I really do. Getting gold will not be as easy as it once was before this is all said and done. And the price will be much higher as a result of the world understanding that by revaluing it, much of their problems can be washed away.
Gold has long been a cornerstone of financial systems, with central banks influencing its market through direct intervention and price manipulation. This relationship dates back to the gold standard when currencies were tied to gold reserves. Although the gold standard ended in the 20th century, gold's importance persisted, especially after the 1971 Nixon Shock, which severed the dollar's link to gold. Over the years, allegations of gold price manipulation have emerged, involving several high-profile cases against major financial institutions. Notably, Deutsche Bank, HSBC, and Barclays faced accusations of conspiring to manipulate the London gold fix from 2004 to 2013, misleading investors and regulators by artificially adjusting prices. Investigations revealed significant deceit within the market, resulting in substantial regulatory fines and settlements. Similarly, in 2020, JPMorgan Chase agreed to pay $920 million to settle charges of manipulating precious metals markets through spoofing. This tactic involved placing large orders for gold futures contracts only to cancel them before execution. These incidents raised concerns about the integrity of the gold market and underscored the need for stricter regulation. Despite these challenges, the enduring appeal of gold has led central banks to continue holding significant reserves. Recently, there has been a noticeable shift, particularly among central banks in Eastern nations, which are quietly amassing gold reserves. Andy Schectman, CEO of Miles Franklin Precious Metals, speculates that a revaluation of gold may be imminent, potentially offering a solution for countries burdened by debt. By increasing the price of gold, nations could effectively manage and mitigate their debt obligations, thereby avoiding defaults or severe economic downturns. Gold is reaffirming its status as a crucial safe haven asset as global uncertainties intensify, characterized by escalating inflation, currency devaluation, and geopolitical tensions. The traditional dominance of the US dollar in international trade is increasingly being challenged by nations like Russia and China, actively seeking alternatives, including precious metals such as gold and silver. If a revaluation of gold occurs, acquiring the metal may become significantly more challenging and costly. Now, let's watch the clips from the interview. Before we proceed, please take a moment to like this video, subscribe to the channel, and hit the notification bell so you don't miss any future updates.
When, again, and I'm not talking my book, I've said it forever, the biggest challenge in getting or in accumulating metal will be just getting it. It won't be about the price. Yeah, the price is going to go higher. It'll be about the availability or the lack thereof. And it's very important to underscore one very, tenet of the metals market. There is no bull market like a metals bull market, because the higher the price goes, or the crazier the world gets, or the combination of the two strengthens people's grip and resolve. Yeah, I was right. I knew it. And after all of these years of being ridiculed by friends and family for having these beliefs, and it's finally coming to fruition, do you really think that these people will sell for a profit and go back into dollars when the world has become the most scary? No. And so the secondary market just disappears. And there comes a point where it's every country for themselves, or every man for themselves. And these countries like Australia or South Africa or the UK or even Canada may look at selling product to the United States very differently than they once did, especially when gold and silver were, tertiary investments at best, second, third, or fourth in line, maybe even more after things like stocks, bonds, real estate, and other forms of insurance and whatnot. So things change. And I think we are getting to that point, this collective realization. And it's all going to be square in the face of the G7. And these are the countries that are selling gold to the United States, with the exception of South Africa, may look at doing just that very differently and be more nationalistic and take care of their own. So, yeah, I think that this is exactly how it happens. You know, I was talking with my dad the other day and said, yeah, I don't think there'll be gold confiscation. They'll just make gold so expensive that no one can afford to buy it. And this is the gold revaluation. They're going to revalue the price of gold. I believe that in my soul. And when you see the central banks of the world, who are the most well-informed traders on the planet, not only wickedly accumulated at a level that is increasing year over year, month over month, day over day, hiding how much they're really truly accumulating, and then speaking continuously of gold being held in the revaluation account and the prospect of indeed revaluing it, it will happen. I do believe that. And they will use it to reliquify the system, which will create massive inflation. But it is something that I think that they will do. It is a way of maybe option 3, instead of defaulting, instead of outright hyperinflating in your face, they'll revalue gold, which will create massive inflation, but will enable them to pay off a large portion of the debt. I think that's what we are seeing. And I think you go back to 1974, after we were off the gold standard already. So they're calling it a reserve creating instrument. Gold is eternal. They understand this. The big money understands it. And he who has the gold and the commodities makes the rules. And all of the metal is heading eastward. So whether we beat them to the punch and kind of steal their thunder, which wouldn't surprise me, or they do it, I would say and I don't want to go out on a limb, but I will, and say by this time next year, wouldn't surprise me one iota if we saw gold revalued to a level that would shock people. And it's an option that's staring them right in the face, and I think it's hard to ignore. So I'm not one for making predictions like this, but I think it's just too much is happening that is leading this way for it not to be understood that the narrative is being rewritten right in front of us on gold. And now with Russia coming out and saying silver too, and China buying up all the concentrate and the doré all around the world, gold and silver have never been more important. And I hope people are taking these weekly calls we have with a dose of seriousness, because I think this is it. I really do. Getting gold will not be as easy as it once was before this is all said and done, and the price will be much higher as a result of the world understanding that by revaluing it, much of their problems can be washed away.
At the September Federal Reserve meeting, most officials supported beginning a looser monetary policy with a notable half-point rate cut. However, there was consensus that this move would not commit the Fed to a predetermined pace for future cuts, as revealed in the newly released minutes. Proponents of the rate reduction argued that it would bring monetary policy more in line with recent inflation and labor market trends. The unemployment rate would need to fall to 4.5% to prompt this shift. Meanwhile, the Bureau of Labor Statistics reported a significant gain of 254,000 jobs in September, the largest monthly increase since March, driven primarily by a record 785,000 increase in government employment, likely linked to the upcoming election. Andy said the U.S. labor market lost 458,000 non-seasonally adjusted jobs in September, despite the reported job gains. The surge in government employment, while boosting overall numbers, raises concerns about economic efficiency. Public sector jobs generally do not drive productivity like private sector roles, leading to an imbalance in the labor market. This disparity underscores ongoing challenges, leaving the economy's true strength in question as the Federal Reserve weighs its next moves in managing monetary policy.
And then you have the reporting agencies. Remember we talked about Claudia Sahm, the Sahm rule, which is I think 9 recessions in a row perfect record, where if employment rate drops, I think 50 basis points below its 3-month moving average, you're in a recession. And the unemployment rate would have had to have fallen to 4.5% for that to be triggered, as it should be. In September, we get this this, again, with the BLS. I mean, we should just take the L right out of this and call it what it is. It's BS. They tell us after revising 1 million jobs in last year, now they tell us that in September that they added a whopping 254,000 jobs, the biggest monthly increase since March, higher than average monthly gain, blah, 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 blah. But what they didn't tell us is that they actually increased the number of government workers by 785,000 government workers, the highest monthly surge in government workers on record. Right before an election, complete and total BS out of the BLS. In reality, the U.S. job market shed 458,000 jobs in September. They're called non-seasonally adjusted jobs. Okay, so those would be the kids who went back to college that were, doing landscape work and part-time work and whatever. We lost 460,000 jobs. We added 785,000 government jobs. And to your point, government doesn't produce anything. They just suck assets out of the system, suck profitability. They don't have the profit motive that we find in business where you do things for a profit motive. There is no profit motive with government. Therefore, it's completely and totally inefficient. And that's exactly what we are seeing here, just this crap and people will believe it because most of the people who think that the economy is strong didn't even see that they quietly revised jobs down at the end of the year for 2023. It's disgusting. We spent $66 billion on illegal immigrants in 2023 versus $4 billion for homeless veterans when you talk about priorities being misplaced. And it's crazy. So, I think that there are a lot of things going on right now that people should be alarmed about. How about this one from the too stupid to be stupid category? Former Dutch Prime Minister Mark Rutte visited the Ukraine last week, Thursday, just 2 days after replacing the gal who was running the head of NATO. And now Rutte is now the head of NATO. And he says, Ukraine is closer to NATO than ever before, and we will continue on its path until you become a member of our alliance, he said. I mean, when you talk about stupid, are they trying to drag us into World War III? Are they trying to provoke Putin? A promise that Ukraine would never be in NATO. And now you have NATO not only providing assistance, providing weapons, but now they're going as far as saying you're going to be dragged into NATO. This is crazy. So, I think it's time that people start to think unconventionally. These are very unconventional times.
A significant revaluation of gold could dramatically alter the global financial landscape, making it far more valuable and difficult to obtain. As demand surges, prices would likely skyrocket, leading to investors and central banks rushing to secure gold reserves, further reducing availability. Countries like Russia and China, which have shifted away from the US dollar toward gold, would gain considerable financial power. Gold could become prohibitively expensive for individual investors, transforming it into a luxury asset accessible mainly to the wealthy. Share your thoughts on Andy's analysis in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.